So welcome to the next video in the Nephew Elite series where I teach my nephew how to trade. In this video, we'll talk about some advanced candle reading concepts. Really, it'll be teaching the basics of reading candlestick charts candle by candle. You might hear Rex in the background. For some reason, he actually wanted to hang out with us. So you might hear him there making some noises here. You ready? Ready to jump in?
I am ready.
Okay. So we did an intro to candles. You understand the OHLC. What does that stand for?
The OHLC.
Mm-hmm. For a candle. When you think about a candle, when you look at a candle.
Open, high, low, and close.
Correct. So what I want you to focus on in this video, in this training, is just the body of the candle. Don't look at the rejections, the wicks, the highs or lows. Just look at the bodies. So let me provide an example so that it's clear. I'm not just saying just look at the bodies. I'll provide a high level end example, and then we'll get into the details about trading candle by candle. So this candle right here, where it closed, the body closed pretty big, and then it closed right here. Here's the level. The most important point that you need to get from this is that level is important. That's a close. Remember I said that candles, that the close is the biggest statement they make.
Yeah.
So, but look at what you need to understand about reading candle by candle is that the candle that follows is a reaction to this candle. So when a candle closes, you're saying, okay, what's the reaction? Is it going to follow through and continue up, or is it going to go down? Well, this candle here, well, what did it do? It closed down here at right around, let's see, I don't know, 22,691. That candle closed here. This other candle here closed, it had rejections up and down. It closed around the same area. But something really important happened here that you should notice if you're reading candle by candle. The next candle, the green candle, what did it do? In relation to this first candle that we're looking at, what did this green candle here, right there, and I'm going to remove this.
It closed above the previous close of the green candle?
Correct. So that is a statement. The chart made a statement. Now you have to decide, based on your trade system or a lower time frame or some other signals, is that statement valid? Meaning, is it going to continue up? But look at what happened at the next candles. And this almost couldn't be more perfect. See that red candle here with the rejection?
Yeah.
Now, with the red candle, where's the open?
At the top. Sorry.
Yeah. Where's the close?
At the bottom.
Like, that's so perfect. Look at how perfect that is.
It's right on line of that one.
Right on line with that candle. Now look at the next candle. The next candle obviously opened. It didn't really give you any new information because the close of that next candle, well, it closed below the open of this red candle.
Mm-hmm.
But the important thing is it didn't close below the level of this.
Okay.
So this is what I mean by, in your trade system, you have to, and you're going to learn in the Rexstock trade system, you're going to learn how to trust patterns and what patterns you shouldn't trust. But you're going to have rules that you can follow on a pattern like this that will give you higher confidence to take this trade. If you didn't take this trade here, you got 3 examples where the close happened above what we call a pay attention candle or an alpha candle. You'll learn about that.
Okay.
You probably should have took the trade here because this trade, this candle here, it closed above this high. So see how it closed above this high?
Yeah. And
it closed above this high. So the way to look at this, and you could look at it this way, the way I like to look at it, is that it invalidated this high because it closed above it. Now this candle, the follow-through candle, pulled back just a little bit, then took off. And then finally we have one that just kind of really ripped up. And then we have the same type of pattern. See this up here?
Mm-hmm.
We have a close. What's the next candle tell us?
It closed slightly above it.
Yeah, but it didn't close below it.
Mm-hmm.
What did the next candle do?
It closed like right on.
Well, no, yeah, exactly.
It closed like right on the line.
This one closed above. Yeah, you're right, exactly. Now, these candles, the way that they're printing or painting, they're not high confidence candles as far as whether or not this level is going to hold up. But we're looking at the 1 hour time frame.
Mm-hmm.
What you'll be able to do is the same patterns that you learn and the same rules that you learn on the 1 hour, the daily, the weekly, the monthly, work on the 5-minute, work on tick charts. The same concepts and the same rules you apply to a lower time frame.
Okay.
So what we could do is you could bounce down to a 5-minute chart and you could say, okay, what is the 5-minute chart telling me in regards to the RDA and the other indicators in the system?
Mm-hmm.
Now, what I wanted to cover too on the real time, so this candle is going to close in about 37 seconds. So we don't really have a, what would be interesting based on this candle closing now, the current candle? What would maybe be interesting about what's happening here? Just based on kind of what you've learned so far, I just want you to think out, like, we have the RDA on the chart.
Yeah.
So I would suggest that maybe you look at that. So I'm giving you a little bit of a hint.
So it's retesting the RDA right now.
Okay.
So if it stays above the RDA, like if it closes above the RDA.
It just closed.
Oh, it did?
Yep.
So it closes above, so most likely it's probably going to go shoot above their RDA again.
That could be one way you would look at it, but the way I would suggest you look at it is we have an overshoot of the RDA, the reaction, the next candle to this red candle, it recaptured the RDA on the close.
Oh, okay.
So now we really don't know if the RDA is going to hold up because it's just one close. We could take there's rules and patterns that you could take a trade on this right away, and then you would know where your stop loss would have to be in various other things. But when we're reading this candle by candle, we don't quite have the information of whether or not the RDA is going to hold up. We have the first signal.
So this is not a good trade spot?
It could be if we were on another chart, or if we were on a lower time frame, we were looking at tick charts. It could be. But what I'm sharing with you, with just looking at this chart here on 1 hour, we do have one positive signal, which is that, okay, it recaptured the RDA, it closed above it. Now, what we would like to see for it to continue to go up is that this red candle that's being formed, that's going to close in 58 minutes, it comes down and then it closes up here. If this current candle closes up here, well, we just got another confirmation, possibly, that the RDA is going to hold. But the problem with that is that maybe this is why it's contradictory. Just because it's up there and we got a signal, maybe on the 5-minute chart or the 15-minute chart, it's switching over.
Yeah.
And maybe the 5-minute chart, it's testing the RDA, and that's where it's going to sell off.
That makes sense. So that's why you check the different charts of the time frame.
Yeah. So the way to look at it is the different time frames and the different charts, they tell you what's happening within a larger time frame. So generally, it's thought that, well, it is the way it is. Bigger traders with larger capital charge larger or trade bigger time frames. So if I'm a hedge fund, I can afford to trade the 4-hour time frame and let that trade work out for a couple days, or the daily time frame. But if I'm a retail trader and I have limited capital, I really can't wait for a trade for days. I could, but I really don't probably have the capital to wait for a trade to unfold for days. Does that make sense?
Yeah, it does.
So a lot of times the philosophy is that if the larger time frame, so if the daily time frame looks like it's going to go up, then when you trade on the lower time frames, you look for clues that that's true.
That it's going to go up.
That it's going to go up.
Okay.
But what I really want you to get from this training video is, if we go back to the daily chart, the candle rules are the same. You can see, like, we can delete all these, and we're on Bitcoin. We can see here we have the same type of rule. Now, it's a little bit different, but it's almost the same pattern that we saw in the hour. Almost. Yeah. These are daily candles.
So this is, by overshoot, you mean it's going over the RDA and it comes back down?
No, I'm not even talking about the RDA right now.
Oh, okay.
I'm talking literally about the level of this candle right here.
Okay.
I went back to levels. Or I went back to candle reading. So this candle right here, I just put a line on the close. Remember, we just went through the hour where I went through candle by candle. What I'm sharing is that the pattern is a similar pattern where this candle closed below, but then this candle closed above this close. That's a signal. Now the next one not quite. This one here closed well below it. So it kind of gave it up. This is exactly why trading would be hard, is because you're getting mixed signals in here, at least on this time frame. But there's rules to patterns that you could apply. And then what happens on this candle here? This is why you wait for the close. This candle here recaptured this close.
And closed above it.
And closed above it. So it did try to pull back a little bit, but then it recaptured it. And then what happened the next day, it just impulsed up. It created another level. What did it do? It created another close level. And what do we see there? The same type of pattern. We see held the close, barely held the close, held the close, but eventually it just lost it.
Mm-hmm.
So this is, but there's a bunch of trades in here, like day trades or even swing trades in here based on this level. And this is just one example of a pattern. This is just what I'm sharing with you, is just reading this is just one way, or this is how you would read candle by basically saying, okay, that closes here. We haven't got into the lows and what that means and everything else. Does that make sense?
Yeah.
So the next concept, the next concept I would share is that when you're reading candle by candle, the candle that follows is a reaction to the previous candle. And especially if it's in the body of the previous candle. So see how this green candle here, it has a close up here and it has an open down here.
Yeah.
But see how this price action, what's called price action, is within the body of this candle?
Yeah.
That's how you would describe that, is that price action is within the body of this candle. You could look at this in some ways where you almost don't get any new information yet, because the market told you that it failed here.
Mm-hmm.
It failed to go higher. So that's one way that's how you'll learn to look at this. This is a failure. This is a failure too. See, in support and resistance, you're going to learn support and resistance. They talk about this differently. You'll learn that both of these are failures. And then you'll learn how to trade against both failures. So this is a failure of price to continue to go up. That's what that is.
Okay.
Now, all the price action that you're seeing in these next couple candles, in the daily candles, are happening right now within this day here. So,
because it's still inside that body.
Yeah. So really, if one concept that you could take away that's real simple, for price to go up, the most important level you have to watch is this level, because price has to break that level. For price to go down on this one, if you're just reading this one candle, it has to break the open of that candle. So if you were to get to simplicity and say, well, what levels or what are the two most important things I should look at for whether or not price is going up or down, the chart has told you. Now you're going to learn rules on how you apply that give you edge, where you'll learn specific rules on how to trade this pattern, and how to trade it highly effectively. So, but the concept that I want you to get is that, okay, well, right now, if price is going to go up, it has to pass this level, and if it's going to go down, it has to if it's going to take out this green candle, it has to take out the open, or it has to take out the close. One or the other. There's no other real way to look at it. So this chart, based on this candle and where it's at, gave you a lot of information that if you learn to trust but also be paranoid, you can trade highly effectively around.
Okay.
Does that make sense?
Yeah, it does.
Okay, so we'll get into candlestick reading a lot more detail. There'll be patterns and other things, but this is really just an introduction to show you the power of trusting candlestick reading. So this is at the point where just go through your notes and just make sure that kind of covered, or I'd like to hear what you got from the video, the key points, make sure that we can move on to the next one.
Yeah, I mean, that was a lot, and it was super informational. Like, I learned a lot. So in my notes, I have that the candle that follows is reaction to the previous candle.
Correct.
As well as if price is going to go up or down, that price has to break the close or the previous open inside of that body.
Yeah, that's a good way to look at it. But what I would say, yeah, that is a good minute way or focused way to look at it. But it doesn't. What I really want to share, or what the most important point is that close is meaningful. So you're right in that statement, but you shouldn't always just think just because that closes above it, because it might be what's called a fake out. It might be just go up there and then roll over. So today in the NQ, the trade that you saw me do, it rolled over in the afternoon, and it was really obvious. There's no reason why anybody should have been long, because every signal in the Rexdog system told you that it was going to roll over.
Okay.
You got an early signal. But if you were doing analysis like we were doing here, well, number one, you would have said, okay, the candles are giving me a little bit mixed signals, but the Rexdog trade system with the patterns and the candles and everything all combined, I should be heavy short here. It looks like it's going to roll over and sell off, and that's what happened.
So I'm really interpreting that next candle.
You're interpreting the next candle. Well, yeah, and you're looking for patterns. So like I'm advancing you a little bit, but the number one concept is that the candle that closed, the next candle is a reaction to that, and then every candle within that body is a reaction to that candle as well.
Okay, that's a good point.
But that's even a little simplistic, but that's a great way to look at it. The other thing is that the market has memory. So I don't know if I mentioned that. So these levels, they will play a role maybe in the future if price comes back there. And you saw that. We went through 2 or 3 examples where I didn't even plan to go to the next level or the next example. And that held up just as well as the first example I showed you. And then we went to the daily chart and we saw another prime example of the concept. I mean, would you agree?
I do agree. Yes.
Okay. So that's the number one thing when there's certain traders that get good at reading candle by candle by candle. And then literally there's even trade systems that what they do is they algorithmically add up the candles and they give a number to it and everything else. You could get really crazy.
Dang.
But and what I think is the best is that there's also traders that could trade just a raw naked chart, and you can do this. I do this every now and then just to test my skills, where you have no indicators and you just trade what's called raw price action. Some traders think that that's the most natural way to trade. You don't need any indicators. I would disagree with that. I think if you add a couple indicators, you're going to have a lot more edge. But you could trade strictly by just reading candle by candle and then creating pattern rules and creating and just seeing what each candle tells you, the reaction to each candle, and then trading around that.
All right.
So yeah, so it's that important, especially if you use candlestick charts, to be able to interpret, to be able to read candlesticks and actually trust what they're telling you. Otherwise, use a line chart or something else. But you get so much more information with a candlestick from the open, high, and low, and then there's other rules you're going to learn. But in this video, you learn kind of one of the most important things. The close is the most important statement. And if you see how price reacts around the close, and you study that, that will give you even more clues of what the chart is maybe trying to do, especially if you do it on a different time frame.
Okay.
Does that make sense?
It does. Yes. Thank you.
All right, sweet. Take us out.
Yacht.